All right, so today we're diving into something that's, well, maybe not the most glamorous topic, but
Okay.
trust me on this one. We're going to uncover some really surprising insights into the world of commercial real estate. We're
Yeah.
talking about the deals going down right now, what's hot, what's not,
Right.
and ultimately what it all means for, well, all of us, really.
Absolutely.
So we got our hands on this real estate listing email. It's from Eureka Business Group. They call it Listings of the Week.
Okay.
They sent this one out on October 19th, 2024.
Gotcha.
And you can kind of think of this as like a little sneak peek behind the curtain. How are brokers actually talking about these properties?
It's a fascinating snapshot of the market, yeah.
Exactly. So they break down these properties by price, starting with the more under $2 million range.
Okay.
First one that pops up here is a 4,000 square foot FlexLight industrial space.
Hmm.
Now, I got to be honest, when I hear flex, I'm picturing like those stretchy pants
Right, right.
that were like all the rage a while back.
Not quite the same in real estate.
Okay.
Flex in this world means the space is designed for, flexible use. Offices, maybe some light manufacturing, research, that kind of thing.
Okay.
It's really about being adaptable, which is a big deal in today's, rapidly changing business world.
Yeah, like a real estate Swiss Army knife, it can do it all.
Exactly.
This particular one sits on a 6-acre lot, which the email is like huge plus. I'm guessing that means room to grow.
You got it. Expansion potential is like gold for businesses.
Yeah.
Especially in a growing submarket, as they say.
Makes you wonder, like, what's driving that growth,
Yeah.
right? What's attracting businesses to that specific area?
Right, exactly.
Okay, next up, we've got a medical office, around 3,200 square feet.
Okay.
They're really playing up this whole affluent submarket angle
Yeah.
and something called limited LL responsibility. Now, I know LL means landlord,
Right.
but what does that actually mean for someone who might want to buy this place?
So basically it means the landlord takes care of all the big stuff, like structural repairs, the roof, the walls,
Right.
and the tenant, they handle the inside of their own space. It's like less hassle for the tenant,
Makes sense.
which is a major selling point in a high-end market.
So it's kind of like those luxury apartment buildings, but for businesses.
Yeah, exactly.
You pay a premium for that convenience for someone else to take care of all the headaches.
Precisely.
All right, this next one. This one piqued my interest. A 5,627 square foot medical office
Okay.
with a corporate guarantee. Does that mean what I think it means?
It sounds more intimidating than it is. Basically, it just means a larger corporation is backing the lease. So it's like a safety net for the landlord.
Got it.
If the tenant can't pay, the corporation is on the hook.
So it's like having a super reliable cosigner for your mortgage.
Exactly.
But for commercial real estate, that sounds like a pretty sweet deal for the landlord.
It does suggest some confidence in the long-term viability of that medical office,
Interesting.
which, that's interesting in itself.
It is interesting. And again, with the limited LL responsibility, seems like a recurring theme here.
Yeah, definitely a trend.
Okay, now, shifting gears completely, we have a 3,000 square foot value add flex space.
Okay,
Now, I'm getting a bit of a fixer-upper vibe from this one, am I right?
you're on the right track. Value add essentially means there's untapped potential.
Okay.
Could be renovations, below-market rents, other opportunities to, increase income, make it more valuable.
So a little bit of sweat equity involved,
Yeah.
but with the potential for like a big payoff down the line.
That's the idea.
Got it. So this listing, it specifically mentions rents well below market,
Right.
and that the tenants on MTM, I'm guessing that means month-to-month leases.
Exactly.
So there's room to raise those rents,
Sure.
especially if you can lock in some long-term tenants.
Absolutely.
It's like flipping houses, but for businesses.
You got it.
All right, I think I'm starting to crack the code of this commercial real estate lingo a little bit.
You're a natural.
Now, I have a feeling things are about to get even more interesting as we move into the $2 million to $5 million range.
Oh, definitely. This is where we start to see.
Oh, don't leave me hanging. So $2 million to $5 million territory now?
Yeah, the stakes are getting higher.
Definitely feeling it. What are we looking at in this bracket?
We're starting to see properties with, more established income streams.
Okay.
Check this out. An 11,000 square foot retail center.
Okay. Established income, I like that. But it's also being marketed as a value add opportunity. I
Right.
thought those were usually more like fixer-upper type deals.
Not always. Remember, value add is all about unlocking potential,
Right.
regardless of the price tag. This one, it's in the Addison submarket.
Okay.
And the listing, it practically screams vacant.
Ah, So prime location,
Right.
but maybe some empty units dragging down that potential income.
Exactly. Fill those vacancies, you raise those rents, boom, classic value add play.
Location, location, location.
Right,
Yes.
they don't say for nothing.
All right, what's next?
Oh, okay, this one's a bit different. A 6,261 square foot property listed for, get this, automotive retail.
Automotive retail. That's an interesting combo. Not your typical mall storefront.
Not at all.
What kind of business are we even talking here?
Well, the listing mentions a freestanding building, large lot.
Okay.
And get this, established business in place.
Oh, wow.
Equipment included.
So you're not just buying the real estate. You're basically buying a whole business setup.
Pretty much. Turnkey opportunity.
Turnkey. I like the sound of that. Makes you wonder why the current owner's selling, though, right?
There's always a story there.
Always a story. All right. Back to something a little more familiar. We've got a 6,200 square foot retail center in a, and I quote, trophy Frisco location.
Ooh, fancy.
I know, right? I'm picturing like a sparkling building with a case full of awards.
Well, in real estate, trophy has a slightly different meaning.
Okay, how so?
It basically means it's a highly sought-after property, like top-notch location. And Frisco, Texas, known for its strong economy, affluent residents.
Got it. So it's a trophy for your investment portfolio.
Exactly.
Not necessarily a literal trophy case.
Yeah.
Although I wouldn't say no to a few awards.
Right.
They do mention it being 100% occupied in a 2016 build. That's got to be a good sign, right?
Oh, yeah, that spells stability.
Stability.
Newer building, desirable location, fully leased out.
Nice.
That's about as low risk as it gets in commercial real estate.
There's always a catch, though, isn't there?
Well, lower risk often means potentially lower return.
Yeah, right.
Yeah.
Compared to those, what were they called? Value add opportunities?
Exactly.
It's all about finding that Barrett.
Finding the right fit for your investment goals.
Okay, last one in this bracket. Another retail center. This one's 7,345 square feet. Strong location, surrounded by high-value retail.
Sounds promising.
But also, a lot of new development nearby. Is that a good thing? Or should we be a little concerned?
Honestly, it's a little bit of both.
How so?
Well, new development, it means the area is attracting investment, which is positive. But it also means more competition, right? For tenants, for customers.
Yeah, that makes sense.
Adds a layer of uncertainty.
It's like walking a tightrope. All right, now we're moving into the big leagues. Properties between $5 million and $10 million.
The big leagues.
What kind of real estate giants are we going to encounter in this price range? All right, we've made it. The penthouse suite of this real estate email. Properties between $5 million and $10 million. What have we got? Hit me with the highlights.
Well, that's where things get, well, a little unexpected.
Oh, how so?
This section, it's pretty quiet, actually.
Yeah.
There's only one bullet point in this whole price range.
Get out, really?
Yeah, just one.
Let me guess. Prime location, endless possibilities.
Not even. It just says a lot of new development nearby.
Wait, seriously, that's it. No penthouse suites, no sprawling estates, just new development.
Seems that way, right? And remember how we were talking about new development being a bit of a double-edged sword?
Yeah, potential for growth, but also like a whole lot of unknowns.
Exactly. And in this price range, well, investors get even more cautious. We're talking big players with a lot on the line.
Right. They want to see how those new projects pan out before they make a move.
Makes sense, right? They're not just buying a property at this level, they're buying into the future of that whole area.
It's like a high-stakes chess match.
Absolutely.
Everyone's making their moves very carefully.
And this lack of listings in the higher price bracket, it might be a sign of something bigger.
Like what?
A broader sense of uncertainty in the market. You've got rising interest rates, inflation, people talking about an economic slowdown.
Yeah, not exactly a recipe for bold moves.
Right. It makes investors think twice, especially when you're talking about these larger investments.
Just like everyone's holding their breath a little bit.
Maybe.
Seeing what happens next.
Exactly.
Wow, this deep dive into this, what I thought was just a regular old real estate email.
Yeah.
It's been way more revealing than I expected. Who knew there were so many layers to these listings?
It's like a crash course in market psychology, but disguised as a real estate email.
And you've done a fantastic job breaking it all down, I gotta say.
Well, thanks. It's been fun.
Before we wrap up, what's the one big takeaway you want our listeners to walk away with today? What's that key insight they can apply to their own lives? Even if they're not, real estate moguls.
I'd say this. Pay attention to the commercial real estate market, even if you're not an investor.
Okay, I like that. How so?
Well, the trends we talked about today, like the rise of those flex spaces, the hunt for those value-add opportunities,
Right.
that cautious dance at the higher price brackets, It's all connected to larger economic shifts. And those shifts, they impact everyone.
That's a great point. It's like a window into the economic engine room.
Exactly.
The types of businesses that are thriving, the areas attracting those big investments. It all tells a story about where we're headed as a society.
And by understanding those trends, it helps us make better decisions, whether it's about our careers, our businesses, or just understanding the forces shaping the world.
Really well said. So there you have it, everyone. A deep dive into the world of commercial real estate that revealed not just property values, but the values driving the market itself.
Never underestimate a good deep dive, right?
Never. Until next time, everyone, keep those eyes peeled for the hidden stories in everyday life.
You never know what you might discover.
That's right. See you next time.